Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost. This is your weekly fix of equity analysis designed for stock pickers. Whether local or international, you can expect a mix of news and my ideas about what I'm seeing in the markets. Welcome to the Supernatural Stocks podcast wrap for 2024. This was the inaugural year for Supernatural Stocks on Moneyweb. I'm incredibly grateful to the team for the opportunity to do this podcast, and it's been really just lovely to see the response from the listeners and from the readers of Moneyweb, so thank you for that. Now, it is a little bit tricky to choose the exact order for this because the answer around the top 5 podcasts for the year actually changes whether I look at downloads on the podcast or transcript reads. But despite this, there is a clear top 3 coming through, and then a couple of others that I'll highlight as well. So, on to number 1, and talk about finishing the year strong. The most popular podcast was actually one of the most recent ones, in which I talked about whether Cape Town is the new Poland for local property stocks. This isn't because I'm horrible at geography, but rather because I've been watching capital allocation trends in the property sector for well over a decade now. In that episode, I explained the drive for offshore property acquisitions during the Zuma years, when institutional investors were desperate to see their money go elsewhere, anywhere else. I then went through why Eastern Europe turned out to be the popular and arguably correct anywhere else versus Western Europe. Finally, I highlighted the recent trend of local funds rotating their exposure towards the Western Cape and away from other provinces within South Africa. My feed at the moment is full of Joburgers having a pretty tough time with water availability at the moment, so it's not a huge surprise to see this, and I think it's a trend that's going to continue. In second place, and really only just because it was also an extremely popular episode, I lifted the lid on my tax-free savings account strategy. I guess it's not a surprise that listeners enjoy hearing about what I'm doing with my own money, although I do try to weave those snippets into practically every show, and I will remind you for the millionth time that you always have to do your own research. You can just take my thinking into account as you make your own decisions. In this particular show, I explained how lucrative it is to build up your tax-free savings account, making sure you max it out every year, and then using that to rotate your exposure to exchange-traded funds or ETFs as markets move from undervalued to overvalued and back again. Now, that is easier said than done, obviously. I mean, that's what we're always trying to do in the market, right? And you need to manage the costs of churn. But the beauty of a tax-free savings account is that brokerage is really your only cost here. Much like being a fund manager, you can change what's inside the portfolio without incurring taxes along the way each time you sell. Although you are limited to ETFs, the reality is that the choice of ETFs is wide enough on the JSE that this isn't really a disadvantage. If there's one thing I make sure of every year, it's that I'm ready to max out my tax-free savings account allocation as soon as the tax year allows me to do it. Even if you can only manage to do it through monthly debit orders over 12 months, that is still great discipline, well worth doing, and well done to you if you do that. Now, I may as well mention how that rotation actually worked out in the end. In July, I sold out of the OneInvest S&P 500 Infotech Index Feeder ETF, quite the mouthful there, which had run extremely hard, mainly because it includes a whole lot of US-based stocks, and especially the really big tech names. It strongly over-indexes to those tech names. I sold it when it was trading at around 30 Rand on the JSE. I bought a couple of property ETFs, like the Satrix Property ETF at around 10 Rand 60. Today, the Infotech Index Feeder ETF is at 30 Rand 89, so it's pretty much been flat for 6 months, admittedly with quite the roller coaster along the way. In contrast, the Satrix Property ETF is trading at 11 Rand 90, a very tidy gain of over 12% in barely 6 months, and that's without dividends, and those dividends are a very important part of property returns. ETFs are many things, but they are not boring, and I cannot stress enough how useful a tax-free savings account is. The third most popular podcast on Supernatural Stocks this year was about the automotive sector, a topic that is very close to my heart as a car enthusiast. Although the term petrolhead certainly applies to me, I have been in electric vehicles, both here and abroad, and I can see the use case for them. I just don't think they replace petrol entirely, and I've never believed that such an outcome would be plausible. This year, it seems like many automotive manufacturers and even governments have finally come to a similar conclusion. You cannot just click your fingers and bam, there's an energy transition. That's just not how it works. Sadly, this means that many manufacturers, particularly in Europe and the US, had allocated way too much capital to EV projects, losing a fortune along the way. In fact, I would argue that BMW is probably the only European brand that currently has a decent EV story to tell. As for the rest, the Chinese juggernaut is rolling in and hurting them severely. In a podcast called China Rattles Global Auto Sector, I talked about how disruption is becoming an increasingly serious issue in that automotive sector, with the likes of BYD in China causing havoc. They might be building your dreams, but they're not building the dreams of European manufacturers, that I can tell you. This is already a hot topic for tariffs, and the heat is only going to get turned up after a Trump administration comes in. But what can the Europeans do about it? And what will the fallout be for the rest of the economy in countries like Germany? This is a story that I will certainly be tracking into 2025 and beyond. In fourth place, we find a show about whether dividends really matter. I used the example of Sasol's dividend policy to explain whether dividends are actually a good way to assess a company or not. This is quite a theoretical discussion, and I've done quite a few of these theory-based pieces on supernatural stocks, with the key being that I always give practical examples to help you understand how this is playing out in the real world. I'm a chartered accountant by profession, and I've done my years in investment banking and corporate strategy, so I try to bring you those practical insights on supernatural stocks, along with my academic training. And that is something that seems to be quite valuable. Listeners do seem to enjoy it, so I'll continue to do it. I'll continue to use supernatural stocks as a wonderful platform to share knowledge about topics like valuations or capital allocation. Please do keep suggestions coming for topics that you would like me to cover. There was an excellent recent suggestion on dealing with when to sell a stock, which made for a great show in the past few weeks. And finally, there were a number of shows that were more company specific, and these attracted quite similar levels of engagement. But I'll touch on just one, in which I borrowed Russie's excellent strategy to talk about the bomb squad stocks on the JSE, stocks that I felt could have a decent end to the year after they struggled in their first half, much like the way in which the Springboks just roll on an entire new army of front row players, and we all know how well that works out. Now, that show was released on the 10th of August, and I covered 3 stocks that had had a difficult time but had some potential to do well as the year came to a close. Those stocks were Afrimat, ArcelorMittal, and the JSE. Not the index, but the company itself, because the JSE is listed on the JSE, something that market newbies always enjoy learning. At the time, Afrimat was trading at around 64 bucks. It's now at 71 Rand, so pretty good, but all of that happened very recently, like a substitution in the dying minutes of the game. This is why it's so hard to time the market. You just have to try and be around more or less when you think something will happen. As for ArcelorMittal, that was just absolute chaos. That was a lesson in market timing of note. The share price went ballistic on the news of Chinese stimulus and then crashed way back down to earth. In the space of literally a few weeks, it was insane. It was a wonderful opportunity to make money, and some people lost some money along the way in a big way. If we use early August as the base for that stock, then performance is actually flat since then, although the volatility along the way really is mind-blowing. If you haven't seen a chart of ArcelorMittal, go draw one for this year. And what of the JSE itself? Well, some Russie energy seems to have channeled through there. It was trading at 105 Rand at the time of the show. It's now at 120 Rand. It's a very nice return in a couple of months. And that's actually the perfect place to end off, because 2024 was a year in which the local index, and therefore the JSE itself, which benefits from market activity locally, showed us what it can do. But even then, you can be sure that I will be including a mix of local and offshore stuff in supernatural stocks in 2025. Why? Because although the JSE All-Share Index has managed 13.3% year-to-date, an S&P 500 ETF returned 25% in rands, and a Nasdaq 100 tracker is up 27%. Even in a tremendous year for the local market, we could still only manage half the returns available in the US market. Be sure to tune in weekly to Supernatural Stocks in 2025 for the unusual and helpful insights that will assist you in deciding how to allocate your capital. And for those who cannot get enough, Supernatural Stocks continues throughout the festive season. Happy holidays, and thank you for listening to Supernatural Stocks in its launch year on Moneyweb. No such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in Supernatural Stocks should be taken as advice.